Good morning traders. In today's video, I'm going to show you how to do top-down analysis from higher time frame to lower time frame. What I mean, we start from monthly time frame going down to 5 minutes time frame. So if you have been waiting for this video, make sure subscribe, hit, and let's start. What is top-down analysis? Top-down analysis is a trading approach where you start from the big picture, gradually move down to smaller time frames to find prices, trade entries. Like for example, big picture, we are talking about monthly time frames and weekly time frames. Then medium view, we are talking about 4-hour time frame and 1-hour time frame. Then sniper entry, we find them on lower time frame like 5 minutes. Okay. You analyze from higher time frame, you see the market direction. Then 4-hour time frame, you see structure and setups forming. Then lower time frame like 5 minutes, we see the exact entry point. So let's start doing top down analysis from monthly time frame. This is Shao USD Gold and I'm on a monthly time frame. So you can see clearly this is a monthly candle. We're on a month of February, this one here, and we have 4 days and 15 hours before this monthly candle closes. So what I'm going to do on this monthly time frame, I always mark the previous monthly highs and monthly lows. Those are my monthly liquidity. Okay. But what you need to understand better is that if it was a bullish candle, let's say this one is a bullish candle, I'm expecting price to grab the high rather than the low. And if price grabs this low, the low, we will look for a red candle, maybe somewhere here. And we'll say maybe the price will come to target the red candle. So first thing, let's mark the high of the candle and the low. I call the high monthly high. I call it monthly high liquidity because I expect price to come and grab the high. So you can see clearly that this is a monthly high liquidity and this is a monthly low liquidity. Those are the two highs that I mark. So I'm expecting price to come grab the monthly high because last month was a big bullish candle, but we had a small drop down. So this remaining 4 days and 15 hours, is it possible for this candle to go close above the monthly high? Yes, it is possible. But what if price doesn't cross above or below the monthly low? It will mean that it will be an inside bar candle. It will cross in this range, which means the move will still remain a bullish move. Okay, but if you want to know where to buy in a monthly time frame, we take our line and mark any of the candle. If you see this one, you mark the top week. The price has passed this one, so I'm going to the next top week, which is this one. So you can see price came near this week, but it didn't touch it fully. So price bought around here. There's a reason why price bought around here, either on a lower time frame. We'll find out why. So after marking the monthly high and monthly low, we drop to more lower time frame like weekly time frame. So on this weekly time frame, we still do what we did on a monthly time frame. Okay. So we look at the past 1 week candle, which is this one. Now you can see it clearly, which is this one. Let me zoom. What I do, I still mark the high and the low, but here's the deal. When the high is already grabbed, you don't need to mark the high. So we mark the low and I call it the weekly low. If this weekly high was not grabbed, I could have called it weekly high liquidity because last week was a bullish move. Okay, so I was expecting bullish continuation up to where we still don't know up to where. Okay, so what retracement are we expecting price to do this week? What we do, we simply look at the on the left side for any bullish candle. We have this one, and then we have this one, next one, which price can come and retrace around there. or we have this one. If price fail around this one, it will come to this week. If price fails that week, it will come here, but it won't grab this low. So this is the last week. So let's first look at this week. Price already have passed it. It's another week around here. So let's mark this week, high of the week, and we're expecting a buying price here to continue. Our next target is this monthly high on a weekly time frame. It is our next target. Okay. So we move more over to daily time frame. This is the last higher time frame. On a daily time frame, you can see a clear structure because price was making high, then we have a low, then high, then low, then there is this change of character here, then 50% maybe, then price is continuing to go up. Okay. So remember, this week I'm not expecting price to come and grab the weekly low, but I'm expecting price to make the continuation. Okay. We still do the way we did on the weekly and monthly time frame. We mark the high of the last day and the low of the last day. But here, the high of Friday has already been grabbed. So what do? We mark the low. I call it the daily low. To me, it won't be a liquidity because the high has already been grabbed. But if price decide to grab this low, then we have to rethink our next move. It will be about bullish move. Okay. So this resistance zone has already been grabbed. So if price decide to make a retracement, where will it come? Yeah, it's another confirmation. We mark the last bullish candle this week there. So we say price might come here to retrace here before going on a buy, either on this weekly week or this, then continue going up. We'll confirm in which of these two zones will be a good buy zone, either this one or this one. Okay. So now we go to lower time frame. Lower time frame. Listen, I've said that. Let me write it here. Daily time frame, weekly time frame, and then monthly time frame. These are higher time frames. Okay. If you come to 4 hour, 1 hour, and maybe 45 minutes, these are medium time frames. Then we have something like 30 minutes, 15 minutes, and maybe 5 minutes. Those are lower time frames. But these 30 minutes, it can be also categorized as a medium time frame. So 15 minutes, 5 minutes, and 1 minute or 3 minutes are lower time frames. Okay. So now we go to more lower time frame, like medium time frame, like 4 hour time frame. In this 4 hour time frame, we look at this support and resistance area. We have this white line, which is it was a good resistance area. You can see how the price reacted this year, then down this year. So maybe you can wait the price to retrace around here. But I want to use a volume confirmation tool. What will I use? I take my tool here, which is a fixed range volume. I put it from the low to this high, or I can decide to put it from the where the daily low is to high, but I decided to put it from the weekly low to the new high. Okay. And here we want to look where are more buyers. Okay. Where are more buyers. So if you zoom in, you can see there are 11.53K. You have 32.14K. Is there any other base that has more buyers than 32.14K? No, no other base. So what I do, I mark that 32.14K around there. And this is not a confirmation. I'm just marking it for the case, but we still have to go more lower time frame to find if there's a zone here. We have 3 zones, 1, 2, and 3. But you want to find that one precise one. Which one we use to enter a buy from today. Okay. Let's go more lower to 1 hour time frame. So we have 1, we have 2, and we have 3. Okay, so price did like price came high, low, then high, low, high. We had a low, then we had a high, small low, then high, then we have low. So this is the last low. By the use of Fibonacci retracement, we can find another zone for confirmation. Okay, let us use our Fibonacci retracement from here, this low to this high. But if price retrace, it usually come to level 0.382 if it is on a strong bullish trend. So for me, I will choose this level 0.382. What if I make this level here and I make the white line as a level of retracement? Okay, so I have this level here. To confirm the zone, we go more lower time frame, like 30 minutes time frame. We had a gap here, so we can wait for the price to refill the gap, this gap here, and then come to this zone. Okay, white line, then continue going up. Or we can go more lower to 15 minutes time frame. Yes, the same. So my first area is this zone. My first buy zone, it will be around this zone, and this one will be the second buy zone, which I've confirmed by volume indicator, but it is not that important. It is not that important. Then the third one is here, which if it touches the 0.7 Fibonacci retracement, I use the zone. You can see, let's remove that volume indicator and we use that zone 0.7, this one here, maybe around there. This one will be our second buy zone around here. So as you can see, these two white lines, you have got them from higher time frames, weekly and the daily time frames. And I'm expecting price to react on either of the two lines, either here. If this one fails, our next zone will be here. Okay, guys. So this is not an easy setup because I didn't find an easy setup because today is a Monday. But if I find another easy setup, I'll post it and how to get the precise entry. So make sure you subscribe and stay tuned for another video. Goodbye, guys.